morning.
Good morning.
Welcome
Good
how is
morning.
everybody today?
Nice and cold in Chicago, 40 degrees.
Much
Wow,
richer than I was yesterday.
we're 58 today. Well, good.
There's always a good chance you won't be today. Sorry.
Uh,
Uh,
Okay. Set your stops.
who knows what's gonna happen?
I know what UNH had apparently I was reading over, they just released within the last 32 minutes their earnings report. Apparently it
We're
was
up.
pretty decent. And their pre-market, they're up like what, $17.
Yep. Yep.
Oh
So
wow.
Definitely. Well,
Warren
we've been
knew
watching it.
something.
We've been watching it for a long time. It's hard to keep some of those big guys down, especially United Health. Margaret's been telling us about them. They know how to take your money. You know.
well, when I saw
Yeah.
them start getting beaten up a good bit and they go from 600 down to 250, and you saw the long-term trend, I just thought, nah, just get a decent chunk and see which way it goes, and up and down a little bit and up over about $150 a share at this point.
That's perfect. Yeah, that's what you want
Oh,
to
it
do.
could perfect would be 300.
A
Yeah.
million.
Well,
A million would be
let's not
perfect.
get too greedy. That's the thing is, we're so used. This is really bizarre for me because I've been doing the markets for over 40 years, and to have earnings come out and everything goes up, 17, 20% one way or the other way, it just is bizarre because I think a lot of people who haven't been in the market for a while uh, think that that's the way it always is, and it's not. I mean, it's bizarre the amount of money that chases these earnings, and I don't know if it's the logarithms trend or retail or what, but it's bizarre. Back when I started, everything was in eighths. You didn't have cents. It was like seven and an eighth, seven and a quarter, seven and a
Right,
half.
right.
You know, and now I mean it's just like everything just and to have like a move of 0.5% in IBM was like huge. And now we've got so many people in it and all the computers trading and markets open all the time. It's bizarre to me.
Well,
But
well, when I first started following this, the what Dow Jones, I guess, was at like at 350 to 400.
yep.
So it's
I mean, my my
1929.
first my first crash was 87, and when the market goes down 25% in one day, and
right.
it was like I forget how much it was, 300 points or whatever, I can't remember, but 300 points is nothing today in the market, to go up or down. We go up and down 600 points. So that's just bizarre. If you've been around a while, you got to kind of reset your brain. So anyway, let's take a look. Today we got SoFi, we got UPS, PayPal in the morning. We already talked about United Health, Wayfair this morning, and after the bell, Visa bookings, Enphase, really, Cheesecake Factory if you're into that. But nothing big until tomorrow's the big one. In the afternoon, we got Meta, we got Microsoft, we got Alphabet, and as those are to me are unknown market conditions because
Routes.
I don't know what's going to happen. And then you got Amazon and Apple, on Thursday after the bell, and you just wonder. You got to make sure that, boy, that the earnings are there. People are going to be looking at how much they're spending on infrastructure, on AI, and they're going to look at net income, uh, and then they're going to look at guidance to see, what are they saying about guidance. And, Netflix came out and they're still down, after their guidance. We'll see what happens. But if these guys trip, sneeze, fart in the wrong direction, it's going to trip up the market a little because they represent 50% of the Nasdaq, 40% of the S&P. So it's going to be a big day, big couple of days coming up. And this is just a big earnings week. So I'm always careful myself on it. I don't play around too much in it, But anyway, it's an interesting market. So let's go take a look here at where we're going to open. And my internet was out at 5 this morning, so I spent 2 hours and finally got it back up. So tried to get everything ready. I warned Trent, so he was my backup. He was ready to roll for me, but I got it up about 20 minutes before the call. And so if I don't have everything today, it's because I didn't have my prep time as much. So today the Dow looks like it's going to scream up another 0.5 point. S&P's, kind of flat, and the Nasdaq with the with what we're seeing in the Mag 7s going to be up again a little today too. And we had ADP came out. They created 15,000 new jobs. I think it's in the last couple of weeks. I think they're doing it weekly or bi-weekly now. You can see up here all the companies that have put out earnings. We can take a look at those. Also, let's go down and take a look. Everyone looks pretty happy except for the 14,000 Amazon workers who are going to be laid off. We just had 15,000 new jobs created, so we're only up 1,000 according to ADP. Kathy Wood, she thinks there's going to be a correction risk, and Bill Gates is talking about climate disaster. So that's what we're talking about today. Let's go and take a look at this here. Tell you what, when your internet's out, you really understand how closely you're related to the world, and you're like, oh my God, you just like I'm flying blind. Really, we're out of everything from last week. You can see this is the watch list. The only thing that really interests me, I put in on Intuit, I put in a buy order at 677.72, and it came really close and didn't hit. And I'll show you the chart. But I really didn't get into anything on these yesterday. These are the ones on the swing trade because nothing was either close to my buys or I just didn't put in an order. We go down to the 200s. We're still in Coca-Cola on a long-term 200-day moving average trade. We're up 4.5%. Show you those charts. International flavors and fragrances, we're still in. Been in since last week, up about 2.11%. Had a couple hit on the end of the 200s. Quantics building hit my buy order, and it ended up about 1.25% lower than that. And then Weyerhaeuser hit, and it ended up about 0.5%. Didn't really hit anything else in here. I don't know why that's highlighted. So we're at $6 down on this, just with 2 trades and 1 day out. So not too much excitement on that. You guys probably did a lot better on yours, the way it sounds. But again, I'm not really too excited about trading this week with these earnings coming out. So I'm not, it's a week for me to sit back and I kind of watch and see what happens, and then one way or the other. Here's our indexes on the 200. You can see we're still up on all the major averages. Okay, from when they crossed the 200. Here's the Mag 7 when they crossed the 200. You see Amazon came back a little. We looked at it last week. I think it was 2%. So it's coming back. Nvidia's up 47%. I mean, so if you had 100 shares of each of those when it crossed the 200, you'd be up on the averages 91,000. You'd be up 61,000 on the Mag 7. So again, that's one trade since the 200, and very simple to do, and very simple to tell you when to get in and when to get out. And you can see just by being patient and not having to trade every day or not having to worry about it, you can just go look at this matrix and say, I'm in or I'm out, and depending on what the 200 is. So easy way to invest using some technicals and just using one line that Trent and I talk about all the time, which is the 200-day simple moving average, brought to you by Paul Tudor Jones. Okay, we'll go look at some charts. The S&P. You say, wow, we're just rolling up, and here's the 200 back here. We looked at the 200, and here's where we crossed. You can see how far up we are, gapped up, and never did come back and fill that gap. So here we are. We've hit off it again, and we're still up. We're rolling up. We're going to open up a little bit higher than we closed again today. So oscillators have turned up, which is nice with these moves up. We had that bad day, back on we're going to increase tariffs by 100%. And then since then, we've tailed right back up. We look at the Dow. Dow's really caught some fire too. Same kind of thing. Got sell orders on the Dow, right above 480.13. So market people in the market think we're going to go higher, at least up to that level. And you see we're going to open up above again and above the Bollinger Band. And we've got oscillators going. So now you look at a swing trade just on this, which you can do on ETFs. It's been pretty good. You know, we look at these every day, and here's your crossover right here, and that's where you would roll in. And we look at the Qs. Same kind of thing. You know, this is the NASDAQ. This is, 50% of this is the Mag 7s. We're going to open up just a little bit higher than we closed outside the Bollinger Band. We got some sell orders up here at 638.32, and the oscillators are all turned up too. So market's geared up and ready to roll. Except for gold. If you're into gold, the gold is going to open up even lower today. So we've got this rise up. We did have the intermediate resistance was up a little higher, and it moves down every day or up depending on how it calculates. You still have some sell orders up here, but I would think I want to look, since the market's going down, I want to go below and see where people might be buying, and it's down here at about 357.97. So it's got a little ways to go from where we're going to open, but we're pretty close on that. So I'm going to go back and move this back up because everything else is going up except gold. So again, you had your opportunity, you went up, and now, we just lost momentum. You can see right here on your oscillators, tell you right, basically, when to get out when you cross over, your cross back over your 9, on a swing trade. That's when you would get out from my point of view, or when you hit intermediate resistance. Silver, again, the money's rotating out and back into equities. Okay, we can see that just on the charts. Here we go, all the way up and back down. We're going to open a little bit lower on silver too. So the next level of resistance or support is right here at the Bollinger Band or the 50. So we'll see, we've hit the 50 before. We'll see if it bounces off the 50 and gets a little steam, or if it goes right through it and the run is over for the most part. Okay, silver, Bitcoin. Bitcoin, we're still up in this 110 to 115 range. We're bouncing off the 50. We did that yesterday. We're doing it today. We can get past that 115 and get into the next level, 115 to 120. Looks pretty good from the oscillators. They've turned around a little bit. It's also really good that we've hit this 200 and found support. It's also good that the 9 turned around and the 20's turning around. And the 50's still flat. So, it's not like that we've run out of gas on Bitcoin. It's just been playing, and go back all the way to July. You can see we've played this game up and down, just hitting up at the highs and then coming back down, dropping a little bit sometimes below the 110 level, but mostly at the 110 level. So now we're pushing on 115 in Bitcoin. And now we'll show you the IBIT. You can see what happens with the IBIT. When Bitcoin goes up, you're rolling up too. So you got some sells, resistance at about 66.37 right now. But, it follows what Bitcoin does, as does MicroStrategy. I think MicroStrategy's earnings is Thursday. It should be interesting. It's come back down, kind of done. Here's your support level. We've seen this before. This is, the start of a good swing. Again, it's tied to Bitcoin, and it's leveraged on it. So 1.5 to 2 times. We've made it above the 9. Okay, and we're going to open above the 9 again today and above support. So we're starting to see this support level move, and as Bitcoin goes up, we'll see this turn. And we don't have confirmation yet on the MACD or the stochastic, but it's looking like it's going to turn positive. Let's look at Ethereum. And again, these are for swing trades and shorter term charts. Ethereum, again, is kind of trying to get past that 50, can't do it. Was sitting right below it again, right between the 20 and the 50. Bollinger Bands are coming together, and that's because we're showing this kind of sideways pattern. See if we can get above that 50 and catch some fire. It looks like we're going to, just based on the oscillators, but again, haven't been able to get past that 50. In the ETF, FETH for Fidelity, had a nice bump up above the 9. You have resistance at the 50, and then you got some sells right above about 43.81, followed by resistance. Look at NVIDIA. These guys have moved up, and it looks like the NASDAQ or the Q's chart. We popped right up. We do have resistance still up here. We've hit this before, 10 days ago or so, 195.62. But it looks like it's going to open up just a little bit higher, right at the upper Bollinger Band. Nice crossover on the MACD. So expect a little more upward momentum, but you got to watch this resistance level and see if we can blast through that. Of course, with the earnings coming out tomorrow, that'll be the catalyst one way or the other, in my opinion. Meta, same thing. Meta's right up. We're going to open up again right above, outside the Bollinger Band. I got sell orders inside where the resistance is, so that's kind of interesting. Resistance at 765, sell orders are at 760.32. But nice little turnaround, nice little swing back up. We're above the 200. Got a nice MACD oscillator moving right here. Volume's good, and again, just the MACDs seem to be rolling again. The Mac 7s, I mean, sorry, MACDs. Microsoft. Too much technical analysis on my computer this morning. Microsoft, same kind of thing. Let's go a little closer here. Going to open up just a little bit outside the Bollinger Band. You got some sell orders above that at 534.42, but we're starting to see maybe a little of that momentum up. Still got to get past some of these highs. Some of them have, but the oscillators are all looking good. We've been flat for quite a while, for Microsoft and some of these, and now they're starting to get off. There used to be resistance here. Remember the green line? Well, now it's gone because the momentum's moved it up, and the program didn't calculate it in. It just calculated where sell orders are. Google. And again, these stocks are important because they move the markets. They are a big part of the indices. And one of these can, if one of them has a little sniffle or a cough, it can make the indices roll down. Google's up, it'll open up a little bit higher. Again, its resistance level that we used to have is now off, but we have sell orders at 278. Oscillators are moving up too. So instead of sideways, we've been talking about that for a long time. We're starting to see these guys catch some bids here. Apple, again, another up move. And here we are going to open about where we closed. And again, resistance is off, 271.75 for sell orders. And again, the oscillators are moving up. So, we get these big swings on the Mac 7s, and it really moves the indexes, and that's what we're seeing. Amazon. Again, look at this nice run up. We came down really nice on support on the 200. Pop back up. I'm going to go back a little bit. Remember, this one was at 2%. And you can see we've crossed the 200 back at this area. Right here, we retested it. And now, because this is about where you would have got in, you move over here, we didn't get out. That's why you only see that 9%, but it was 2%, earlier when we were hitting back down in here. So, even on your investment using the 200, came down, kind of gave you a scare, you kind of hung in there, and off it goes again. So your investment on the 200 still looks pretty good. And what else we got? Tesla. Can't forget Tesla. I don't know if it comes up for me. There we go. Tesla, it's the same kind of thing. Elon bought, came up, kind of went sideways. We do have resistance on Tesla. It went up, touched it yesterday. Going to try open it up a little bit higher than we closed again today. See if we can get past resistance. 462.29. Then you have sell orders up there at 469. Still haven't got the crossover yet here on the MACD. Okay, so it still have that sideways pattern. It hasn't caught as much of a bid as the rest of them, but it's starting to move up a little bit. And our MACD or our RSI is at 58. So that's some momentum. Palantir. Palantir, we've been this sideways. Like, resistance has been here for a long time. We've been coming up and hitting it. Finally starting to see a little bit of a turn up on the 9 and the 20. We got it right on the, stopped right on the resistance level again on Tesla. It looks like we're going to open up right about at that level too. And you've got some sells at 196.83 sell orders. We're going to open up just a little bit above, but it's having trouble getting past that level. A little bit of a crossover on the MACD. But again, that can get over and pump up. We'll see. when these earnings come out. Netflix, since earnings, they came out, they had some issues with taxes, I think, in Brazil or something. And we're still under the 200, tried to keep above it, still under it. We're going to open up about where we closed, right on the lower Bollinger. You can see all the oscillators are moving down. So this kind of concerns me a little bit on these earnings. You see what happens, but we'll know tomorrow after market close on what's going to happen. IBM, just want to show you IBM. Again, earnings came out, and now IBM's on a roll up above, outside the upper Bollinger Band. Had a nice run here, came back under. Now you're outside the Bollinger Band. I don't like to buy outside the Bollinger Band, but you got momentum, and normally you don't trade outside of a Bollinger Band more than 5 times. Only 5% of the time do you even trade outside that. But if you got momentum rolling, these sell orders are 329. We closed at 313. So people in the market think it's going to roll up to at least that point. It's where they got their sales, and the oscillators still look good. And as we talked about, United Health came out. It's been nice. United Health, we've been watching it a long time. It goes flat, comes up, and then here's where we're going to open now. Last I looked, 382.32. We closed at 365. So it's going to be a nice move on United Health. So anyone got in, that's a good move. And it's hard to beat some of these big companies. We talked about it when it dumped. Why this is over here? Pull this over. We talked about it when it dumped, and then we watched it right along support, and then it dumped again on us, and then it came back up. But yeah, sometimes it's hard to keep these guys down. But if you watch, even on a long term, if you're doing an investment, here's the 50. You could use the 50 as much as the 200. And then you got in on the 50 and you're still rolling right along. Now we're coming up close to the 200, for an investment. If you're looking in for an investment, this may be something you might want to look at and get above that 200. Then you go all the way to 525 till you hit the main resistance level on United Health. Okay, a couple on our watch list. Intuit was the only one that I tried to really roll into. Let me get a little closer. And right here is where I put in a buy. And it was because I went right back here and touched that. And it looked like it was touching, but it only came down to 677.29. Didn't hit it, just barely, and then popped back up. So maybe I'll watch it again today and see if I can get it to pop down and maybe get something. But we're still kind of in the upward movement. Got nice oscillators. I like to get them on sale. If I don't feel bad. If I do, I feel better. So, and into it, I didn't do anything really. Ben Franklin, or Franklin Resources. That one didn't hit because it's way too high. It went above. I always try to get it a little lower, and it just doesn't work out. Sometimes you got to chase them, but I'm not a chaser, so I let them go. And especially with weeks with big earnings like this, I'm not in any hurry to get into anything. Here's another one. Didn't come back inside the Bollinger Band. I would have wanted to see it come back into this level, but it didn't. But it's running up. But right now you're up against sell orders. It hit it twice, so I'd be careful on American Airlines until we get past that. A couple others that you might want to look at for swings. EQIX, okay, came up, retested the 200. We like to see that. You got sell orders just a little above at 853, but it's a nice run. It got up above the 200, retested. Kind of gives you a better idea that we're still okay. We're inside the Bollinger Band, so it's a nice looking chart. We've got oscillators going, and I like it when it can find support at the 200. So that's where your support level is, and then you've got some resistance at the upper Bollinger, and then some sell orders. A couple others. Boeing. Boeing's another one. It's come up, got above the 50. Nice. It's above the 200. It's above support. Started rolling up. I think Boeing has earnings coming up, so check out and make sure you know where the earnings are. I'd have to go look at that, but I think it's coming up. So I wouldn't want to get in before earnings for me and my personal plan. But some people don't mind that. And then the last one you might want to look at, NDSN, above the 200s. This is one of those slow kind of rollers. We've had this on the list before. In fact, yeah, we had it, at this point. And so it's just kind of one of those slow ones. The oscillators aren't moving very fast, but it just seemed to be rolling between where we had support and 9 in the upper Bollinger Band. So a couple extra for your watch list. Under the 200, sorry guys. Still in, okay, I don't know where, I think we got in back at this level. Yeah, we did when it hit the 50. It's rolling right up. You expect it to come back inside the Bollinger Band. I would set, a stop right above where the 9 is. And here's, you got support. You can put it on the support level too if you wanted to stay in on that. NX came back down, still above support of the 9, same kind of chart. Again, didn't quite get into that one. Couple others I wanted to go over. Coke. I'm going to get it over to Trent. Coke, we got in here. We swung traded up, got out here on the swing trade. Then we gapped up at earnings. We said, okay, let's make it an investment, see what happens. We're still coming down. Now it's got a resistance level, but we're still above the 200. The 9's coming up, the 20's coming up. We'll see if we can pop this up, but definitely, here's your 200 on an investment. So if it came down and got below that, you might want to get out. You're still above where you got in. And if you got out to 200, you're still above where we swing traded. So, it's a win-win on this one. Coke. What else do we have? Oh, KDP. KDP has earnings or had earnings yesterday. And we got out of it on Friday, and so earnings came out and it went up. And that's what happens. Sometimes it goes up, sometimes it goes down, but we made, good money on KDP. But had earnings, people chased it, came back down, and so we're outside the upper Bollinger Band. CDNS had earnings yesterday, and it went up nicely and came back down right to resistance. So again, earnings are looking pretty good. NXPI, so it must be guidance. I don't go into each one of those. This had earnings. Initially opened up, came down, and ended up right about where it started on NXPI after earnings. And then Waste Management had some earnings. And on this case, after earnings, I don't know what they did, $1.49 a share. I don't know what their guidance was, but it went down. So, and something, I started looking at these charts before earnings. When it's down, 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 you wonder, did somebody know something, in advance or not? And you start seeing that. Certainly not indecision of, running it up or down and back and forth. So anyway, hopefully that was helpful. Oh, some of the ones that we looked at yesterday in crypto took off yesterday. And some of the ones I talked about here was ASST, that went up 49% when the market opened. SMLR, this guy went up 31%. BMNR, this guy went up 6.5%. Yesterday it's right up against resistance. Iran, again, when Bitcoin rolls, you start to see these guys roll. Iran went up 3.32%. ClickSmart, that guy went up 4.3%. The only one that went down that we talked about yesterday was Hive, and I don't know if anything came out. Hive went down about 2.61%, and then you look at Hut, which is another miner, and Hut went up about 4.5%. So of all those ones that we looked at yesterday before the market opened, all but Hive went up pretty substantially, especially ASST and SMLR, who are together now they're going to merge their companies, so they're going to move pretty close together. Okay, for having 20 minutes to prepare, that's what I got, guys, and I'm going to turn it over to Trent, and I'll look through the chat and see if you guys want to look at anything else when Trent's over. Take it over, Trent.
All right, so just a review of where we're at, where the options market is pricing in support and resistance, bullish, bearish, trend shifts. SPY is the S&P 500 ETF, and we've got a resistance level of 690. That's moved up since yesterday from 685. So we're seeing a readjustment in option market makers adjusting their books a bit, they're hedging. Still flip line right around 676. This is where you go from bullish to bearish or volatility expands once the stock price jumps below or goes below the flip line. And we have a major support at 660. So we're inching up higher. 7,000 is my target by year's end on the S&P. And at this rate, I wouldn't be surprised if we make it there by um, mid November, and then after that, it'll probably between 7,200 and 7,500. On DIA, not Denver International Airport, but Dow Jones Industrial Average. You've got a big resistance level at 477, and your big support is at 460. And your gamma flip line is at 464. So we're in a very bullish, low volatility environment right now, which is good for stocks to go higher. The triple Qs we are up against or coming up, will open right up against resistance at $630. Looks to open at 629.91. Closed yesterday at 628.09. Your flip line here is 619, and your major support is at 600. So there is more resistant. We're closer to the resistance level and further from the support level. So take that in account. I think a lot of this will possibly shift after earnings as we get in throughout the week, as these major Mag 7 stocks start to report. IWM, this is the Russell 2000, big support level at 240, flip line at 248, and resistance, your first, pardon me, big wall resistance is at 255. Take into account, these are companies, these are smaller, mid-sized companies. There's a lot more credit risk potentially there. And one thing I wanted to hit upon was a conversation I had with a good friend of mine who's been in the industry, started as a Nikkei futures trader for back in the late 80s, early 90s. We had coffee yesterday, and he's been in the mutual fund rep side for, well, since I've known him since 2000. Excuse me, 2000. Yeah, 2000. Wow, 2000. And we and I get together, and he's pretty straight shooter. And basically, we were talking about this move from 2020 to where we are today. And we were talking about credit, and we've talked about the volatility and the risk of credit expansion. And to give you a sort of a picture of how much liquidity has been pumped into the system since 2020, um, from 2020 to basically 2021, we saw about 4.8 trillion was put into the economy through quantitative easing by the Federal Reserve. And then after that, up into basically 22, we saw fiscal stimulus of an additional, well, 5.2 million. So a total of $10 trillion has been pumped into our economy in the United States. This does not include anybody outside of the United States. So you can imagine the amount of liquidity has been pumped into the system. Now, the Federal Reserve's balance sheet got as high as 9 trillion or so dollars and some change, and today sits at around 6.6 trillion. So what they're doing is they're allowing a lot of these uh, treasury issues to roll off, mature, and that's brought it down, roughly 2.4 trillion dollars from its peak. But now we're starting to see activity in the overnight market, the reverse repo market, where banks are now coming in to grab more liquidity. And what we're seeing is we're starting to see well, we have been seeing a tightening of liquidity. And as Peter and I were talking, he's like, think about this. You got all of this money that was injected in $10 trillion into the system through Federal Reserve and fiscal stimulus. At some point, you're going to have to pull that back. And we're starting to see signs of that pulling back. And I said, well, you know, does that mean if you pull the liquidity out of the system or let it mature out of the system, that that floor that has pushed, that has ramped us up since 20, since March of 2020, does that floor start to fall out from under? We both agreed at some point this correction that we've been talking a little bit about, this credit risk in the market. We're starting to see this in the subprime markets when it comes to subprime car lending. All different subprime lending standards have been thrown out the window. We've seen that through Tricolor and a couple others. This is going to start trickling upwards. And we both agreed that we're going to have this last sprint towards the end of the year. I've said 7,000. He said 7,500. You see a forward P ratio on the S&P 500 go from, I think today it's at 22. You'll see it get up into the 25 to 29 range. And at that point, this market is way overvalued. But that puts us into potentially the first quarter of next year, second quarter of next year, when we'll start to see this pullback. And I started thinking about this. I'm like, if you start to pull all this trillions of dollars of liquidity out of this market, where does the S&P 500 head to? And I look at, well, my first major resistance level, which was tested on April of 25, was created in January of 22, is right around that 4,700 to 5,000 point marker. Well, okay, so if we get to 7,000, or let's just, say 7,000 here to here, well, that's a sizable drop. Okay, well, what if we go back to where we were in January or February of 2020? And that would put us at 3,378 on the S&P. Basically, the S&P gets cut in half by 50%. When I look at markets and I think about markets, we are so driven by credit. We buy things on credit, we buy homes on credit, we buy, as businesses, we borrow money to buy equipment, this, that, and the other. And this stimulus we've had since 2020 is 10 trillion. And a lot of that's starting to mature. We're also seeing that our national debt is over $38 trillion now. That's what, $1.5 trillion in interest payments a year right now. We're at the brink of not being able to pay the bills. And I look at this and I go, is the plan by Washington/Wall Street is to get this back down to a reasonable level? As my friend Peter pointed out, your daughter can't buy a house in your area because they're so inflated. At some point, we have to reset the system so that your daughter and younger generations can buy homes, can build the American dream. And I look at where we are at in this market, and this just insanity of spending on AI. OpenAI says they're going to spend, the next 10 years, $1 trillion. Yet they got like what, 15 trillion in cash, and they're generating what, a 13 trillion a year. Where's that money coming from? Where is it manufactured from? And so when I look at it from my risk management process and I'm looking at this, I'm looking at what is happening in credit markets, what's happening in subprime credit markets, and then eventually this 10 trillion that we have spent, or we're forking the bill for right now as citizens. At some point this is going to roll off, or it's just going to go away. What happens to the stock market? And so keep that in mind as we move forward. Keep that in mind as you build your risk management process out overall. Let me jump back here real quick. I had a request the other day, yesterday, to hit upon some of the different sector ETFs. And I think this is for a lot of people who are, they're not swing traders or day traders. they're more of buy and hold. And so I wanted to hit upon a couple. TLT is represents the 20-year Treasury bond market. Options are option indicator gives a resistance level of right around 92, a flip line of 91, and a big support level at 88. So as you can see, the bond values, the 20-year plus Treasury bond values have gone up pretty sizably over the last couple months since August, which means money's coming into Treasuries, so it's a risk off kind of approach. You think about October, October's been pretty volatile month. So money has moved out of a risk on assets to risk off, driving, TLT higher. But we're starting to see some weakening. We're starting to see hit resistance right around 92, above the intermediate trend line, above the trade trend, of course, above the 200, the Tudor Jones 200. So keep that in mind. The AGG, which is the Lehman Brothers, or well, iShares now, U.S. Aggregate Bond Index. I don't have a option indicator on this to give us ranges, but we're above the trade, we're above the intermediate, above the 200. So money's starting to flow into that area. High yield debt. This is HYG. This is another one to keep an eye on. If things go bad, this is where it'll go bad. But yet, high yield debt in this case has flowed with the equity market. So risk on asset in bonds, you get paid a nice yield, but you get some level of the effect of rising equity markets above. We just recently passed through back above the intermediate trend line. That's right at $80.69. And we're above the trade trend line. So we're moving higher, but we're in sort of a resistance level potentially since September 22nd, right at the what is that, 81.32 mark. Gold. This has been the popular trade, but what I've mentioned before last week, gold has been a trade accumulation, vertical move. Went back almost since the Fed started raising rates. Well, the bond market is basically pricing in. We're to open at $360. Oh yeah, $361 on the GLD, which is the gold ETF. Your gamma flip line is at 367. So you should anticipate more volatility in GLD or gold in general. Your resistance level is at 695. You can see that has hit here, but these options adjust throughout the day, throughout the night, and this hedging happens. You have support here at 350. So that puts us really close to the intermediate trend line. Secondary or third tier level of support is at 340. So I'm interested to see if we see the price action on GLD come down towards 350, my intermediate trend line come here, and this becomes your support level, which would be a potential place to enter. Some sort of a side note I saw where um, uh, Federal Reserves or governments are now holding more gold than US Treasuries, which tells you a little bit of the shift in how the rest of the world looks at us from a risk standpoint. Silver, similar action, similar kind of scenario. You've got a major support level at 44, a flip line at 43.50. We're looking to open at 42.32. So you should anticipate more volatility in silver, probably down to that $39.05 mark on the SLV, which is the ETF. When we look at materials pretty much flatline. We're above the Tudor Jones 200. We're below the intermediate trend line. So really not a lot of action there. Energy, XLE. This is another one. We've got support at 85. We're below the gamma flip line at 90. We're looking to open up at 88 today. And you got a major resistance at 82. basically a sideways movement in energy. But from a long-term standpoint, we've got to look at energy as how you're going to power these data centers. And that's going to become a bigger factor, I think, in the next 24 months when it comes to getting these things powered up and keeping them powered up. And energy is going to be a big part of that. XLK, this is the technology ETF, got a resistance level priced in at 300, flip line at 287.50, and then major support at 265. So we're right, technology, in this case, XLK, right up against resistance. We'll see it's supposed to open up at $300.63. We'll see if it holds the, hold closes above that. If it closes above it, we're going to see 305 and 310 as your next resistance levels. Now, chances are, if it does close above this, we'll see some adjustment in where the market makers are hedging their books or how they're positioning it. So, but when I look at this right now, we're up against resistance. Don't expect the world from XLK or technology in general. And let's just hit on one or two more. XLV is the healthcare index. As you can see, we've had a nice move higher, had a close above the last couple of days, above the highest resistance level at 165, where the options market is pricing it. Support level, biggest support level right now on XLV is right at the flip line, 142. So we're starting to see healthcare as being a big player. Third level of resistance at 147, and then your second level of resistance at 155. So we could see another move higher in healthcare in XLV. So for those intermediate to longer term investors, this could be your positive. What I like about this is your intermediate trend line is now starting to look to pass through the 200, which gives you a nice, 62-day period of momentum pushing XLV higher. And so that could be a great opportunity for more of an intermediate term upward trend. And then industrials, let's just look at that. You've got resistance at 157, a flip line at 153, and major support at 148. But you have this big accumulation period, in my opinion. This has been moving sideways since July. Industrials is part of that build out process of AI, and over say the next 12 to 24 months, I think you're going to see industrials become more of a strength versus a weakness overall. You'll see some ebbs and flows, but I think these accumulation phases, as we saw from here May until June, accumulation move higher, accumulation, we'll see if it breaks higher, it goes higher. So I see it as a positive. And then XLF, the financials, this is right now, we're right up against resistance at or near 54 is the resistance level. Your flip line, which means where we're at today at 63.34, we should anticipate more volatility. We're more in a neutral volatility state, but we're right at support at 53 as well. So depending on what we start to see from the financial industry, Mark and I were talking earlier about the number of banks that are going to the Fed window overnight to trade their treasuries in or mortgage-backed securities for cash to function. And I think this could be one of those signs of if we see volatility increase in the financial sector, XLF will see that and feel that. Now, volatility can work for you, it also can work against you. But we're in sort of this neutral position. So keep an eye on that. Could be if you're a shorter or you buy puts on sectors, this may be one to keep an eye on. So overall, I'll try to hit on sectors and other ETFs, long-term type stuff in the future more often because it was requested. But overall, I believe 7,000 on the S&P. I think you're going to have this big suck in of retail investors. And just remember, what goes up must come down at some point. And as we get into the first of the year, I think credit is going to be the um, ugly child in the room, and it's going to go berserk. So be very aware of that. All right, let's open up for questions, comments, and charts.
Well, we had a question someone wanted to know about if I just trade or if I have long-term accounts. And I do. I have different accounts. I have a long-term account. I have an income account. I have money market accounts, and I have a swing trading account. So long-term, I've been haven't been too shy about saying I own Berkshire B. And I've owned that forever. And why do I own Berkshire B? Because ever since inception, Berkshire Hathaway has returned about 19% ARR over every year. Okay, so I like 19% return. I own MicroStrategy. I've had that since probably 2020 because I also own Bitcoin long term. I started getting into that in 2020. Also, I think that the blockchain and especially Bitcoin are going to be critical. Bitcoin only has 18 million Bitcoin out there. I think with the debasement of money and the devaluation of money, and what Trent talked about, that countries and sovereign funds are going away from our treasuries and into gold, looking for more hard money, solid money. Bitcoin is a way to go, and Bitcoin has been returning since in 16 years, an average of 60% a year. So I want to be in that. I also play in the IBIT, which is the Bitcoin ETF long term. I got into that right after BlackRock opened it, and a couple years ago. So doing pretty well on that. And then for if I want to put into a kind of an ETF that I like, the one I like is I don't go into SPY or Qs. I go into this one called ITOT, which is the total U.S. stock market. Has 2,500 companies in it, so I spread my risk among 2,500 as opposed to that. And you can see you can use the Tudor Jones 200, as an investment line to get in or out, or you can use the 50. If you want to be a little tighter, you can see this one's come down, hit the 50. So if it comes down and breaks the 50, you're out. And if it goes all the way down, hits the 200, comes back, you're okay. But if it goes past it, you're out. So those are kind of the main ones I have. I have money sitting on the sidelines, but it just doesn't sit there. Fidelity has some pretty good money markets, so pay around 4%. Otherwise, I switch it into 30-day T-bills, or I go into CDs for 30 days. And so I have CDs rolling up or T-bills every week. So I have cash coming in. I can look if I want to reinvest it, if I want to trade with it, or I put it back in on a T-bill or cash. I try to get a little bit better yield, then you can get out your savings account. Then I have an income account. Okay, an income account is to generate dividends for me. And so I'm a little bit on the risky side here. So, I don't suggest you guys do this unless you know what you're doing. I do a lot in the Bitcoin area and the MicroStrategy. I have one called BITO, which is a futures on Bitcoin, and it pays out monthly dividends. I have Misty, MSTY, which is a weekly payer now off of MicroStrategy, but they're forward covered calls. So as the stock goes up, you might get a better dividend, but covered calls, you're limited to the upside because they expire. But that's weekly. I also use the YieldMax YMax covered call strategy ETF. Again, you got to watch that your NAV doesn't get destroyed. Your NAV is your net asset value. If they pay out too many dividends weekly, it takes out, you're really paying yourself back. And your principal, if you got in at $10, might be $5, and you only got paid back $7. So you got to keep really good track of that. And then I have one called Omaha, OMAH. It does covered call strategies on everything that Berkshire Hathaway owns. Okay, so Berkshire doesn't give out dividends. These guys give out monthly dividends, and their goal is 15% annualized return on their dividends. And so far, since I've been in it, they've been spot on at that 15%. So that kind of income can feed either things I want to do, or I take it and I buy other stuff with it. I usually take my income from the Bitcoin or MicroStrategy, and I go buy more Bitcoin with it every month. Okay, so it feeds into that. And then I have a swing trade account that I just play in and teach you guys how to do it. I'm not a huge swing trader anymore because I'm at the age that I have assets. I want to keep my assets, but I do want to go out, and you can occasionally with swing trades pay for your dinner, pay for your vacation, or other things you want to do, you know, and it keeps you interested in the market. But I'm really more, I like the long term. I like the 200-day moving average or the 50-day moving average on when to get in and get out. That's what I tell most of the people that I know. I say, if you don't have time to swing trade, and I'm not a day trader, I swing trade. If you don't have time to do it like we do here, you might just want to use the 200 and go in and out like the ETFs that Trent was talking about, or this ETF right here also. Okay, so if you have any more questions on that, that's where I'm at, being an open book. We have a few
Two questions.
requests. What's that?
Two questions, please.
Go ahead.
One you already answered, and I must admit I've forgotten the answer. So this one, well, yeah, that happens a lot too.
I'm with you on that, Zeke.
Yeah. Where do you plot the sell orders? Where do you find the plot that you often say, well, there's a bunch of sell orders up there.
Oh, so see this line right here?
Yeah.
That's your sell orders. And where does that come from? See this technical analysis button
Yeah.
right here?
Yeah.
Support and resistance here and stops here. Okay, stops is where it's at.
Okay, stops is the same thing, sell order.
Yeah.
Okay, good.
Yeah.
The other question is, instead of me saying I have two questions, how do I raise that little hand icon? I can't find that sucker either.
Where's that little hand icon? Is it down at the bottom, Trent?
No idea.
All right, for people who put your hand up, how
Is
do
it
you do it?
react? No, that's raise hand. Go under react, REA.
By your effects, it's on top of your effects. It's by itself. It says raise hand like this. If you push it on your heart, if you push on that heart where it says react, and there's a little square on top by itself.
Ah, okay.
Did you find
Thank you.
it?
Yeah.
Great. Okay. Anything else, Zeke? Got you covered?
No, that's got it. I'm good to go for a while.
Okay, sweet.
Thanks.
You bet. ORCI. Was it Oracle or ORCI? I can't remember.
Was
Oracle. Oracle. Okay, Oracle.
Oracle. Yeah.
Oracle. Oracle had a nice bounce up here after earnings, rolling right along the 50. Went up. Now we've got resistance here and sell orders right above resistance. We've kind of gone sideways. And look, we've come right back down. We're bouncing on the 50. We've done that before, and then fell under and came back up to the 50, right where earnings were. And so now you're doing about the same thing on Oracle. It's under the 9. You have resistance right above it at 291. This is usually where I get out on a trade. Okay, if you're investing and you use the 200, you're still in. If you're using the 50, you're still in as an investor. I'm below the 9. My oscillators are negative. From a trade wise, just opened up. From a trade wise, this is something I'm not interested in. I don't know when the earnings are on this, but it could make it go either way. That's probably what we're waiting for on Oracle right now to see what will move it. SYM. That opened up and right on, here's resistance. Look where it opened, right on resistance. Again, the oscillators haven't turned the stochastic has turned, the MACD has not, because we're going sideways. Look at this, 1, 2, 3, 4, 5, came up to where sell orders are, back down 6, 7, 8, 9, 10, now we're 11. So it's got to get past that somehow, and maybe it's going to be earnings that gets it rolling, but the Bollinger Bands are moving closer together and you still haven't got a crossover on the MACD. And the last one I wrote down was ASTS. And again, these are for trades, okay? Nice run up here. I mean, if you look at this, you followed it and you saw this, you go down here, you have a crossover in the MACD, run it all the way up. I'd get out at the resistance level, which went a little higher and then came back down. Now you got sell orders below the resistance level. You see the 9 came over. You see this a lot, comes up, hits resistance, and rolls back down. Today, we're getting a little bit of a bump above the 9. We don't have a crossover confirmation on the MACD. We do have a little one on the stochastic. But again, you got some sell orders right above it at about 82. 62, and those are the ones I have, Trent. Okay. What else?
Real quick,
Okay. All right, I answered
real
Dennis's
quick.
question. Okay, go ahead.
Just hip on NVIDIA. It's interesting. I'm watching the option hedging or pricing that's going into this. Yesterday, 190 was the major resistance level on NVIDIA. It opened and closed above it yesterday. Yeah, closed above it at 190, 149. It's opened up again. The options market basically readjusted their hedges, and now their major resistance level is at 200. And then your third level of resistance is at 195, and we're pressing up against that right now. So I'm interested to see where NVIDIA is headed. Your RSI is 66 and your MACD is turned positive. So remember, they're 8% of the S&P 500, pardon me, market cap. They're going to push this higher, and their earnings are November, I think, 19th. So they've got some room to run until earnings, but after that, time will tell. Chances are, I think NVIDIA will probably report something positive, and that will push the S&P, excuse me, higher as we go forward. So one thing I'm just keeping an eye on overall is what NVIDIA is doing. You can't argue with flows into these indexes and the underlying stocks because, I mean, 401k contributions, you follow the money. Wherever the money goes, that's where the market's going to go. So, or stocks are going to go. So that's what I got.
Okay, one more. Sprock asked about SOXL, which is the 3X bull for semiconductors. You can see this is a leverage fund. I just was watching last night before my internet went out about how much leverage there is out in the market, and retailers especially are using these leveraged ETFs, and they're the highest level they've ever been. Okay, so these are great when the market goes up. Like here you were started out, at 915, and we're sitting at 46, 48. It follows the semiconductor ETF basically. It goes up 3 times if the semiconductor goes up 1, but it goes down 3 times too. Okay, these are highly speculative kind of products. I mean, look here. Okay, so here's the semiconductor, 184. Okay, 360. So it follows the semiconductor. Those are products that you need to read about because they're only supposed to be used intraday, which means within the day by traders, not long term. Because if you have it and you go on vacation for 3 weeks and you forget you had it and it goes down, something happens and the semiconductors dump, you're going to dump 3 times that. So just be careful. But it is a way to leverage your money. And I don't like people leveraging money, but it's really up to you to do it, especially if you're new in the market.
Well, and you think I was reading about sort of the acceleration in leveraged ETFs over the last 24 months. And it's amazing how my new leveraged ETFs have come out, single stock leveraged ETFs.
Yep.
And if it's a 3 times and the S&P goes up, say 2%, that means that theoretically that ETF will go up 6. But if the S&P goes down 9, that theoretically means that the S&P will, excuse me, if the S&P 500 goes down 3%, that ETF will go down 9%. So then you get this cascading selling event happening because of the algorithms kicking in. So it could actually be more than the actual underlying index that it would sell off. And I think that's one of those things to keep in mind. It's an intraday play. This is how the institutions use them. They trade them. They trade against you because they know you're going to hold them overnight, and they position themselves overnight to actually profit from the fluctuations when the market opens up in these stocks. So just be aware they can suck you in with a lot of, oh wow, it's been up, X%, over the last 30 days, but quickly that can evaporate in a matter of hours. So just be very careful of these leveraged ETFs. They're very complex and there's a lot going on underneath the hood when it comes to these things. Anybody else got anything?
Oh, I'm glad my internet's
All
back,
right.
but man, it's not the way to start your
No, it isn't.
day. Definitely
No,
not.
you got to have a backup.
Oh my gosh.
All right.
Affected
My
by,
backup was Trent.
did you get
All
affected
right.
by that storm yesterday, Trent?
We got a ton of rain yesterday. Um, and we had some tornadoes about an hour down the road from us. Mexico Beach got hit. So we got, I mean, we're very fortunate. We haven't had we just got a lot of rain.
Yeah, I
So
forecast it was pretty
everything,
close by you. I
what's
saw
that?
I saw that forecast last night. It was pretty close. The wind
Yeah.
for you.
Yeah. I mean, it rained all day. So, well, it started really on Sunday afternoon.
Yeah,
And so
that's
today it's overcast and it's misty out. So,
glad you didn't get
see,
affected by it.
what's that?
I'm glad you didn't get affected by it.
Yeah, same here. I'm
Yeah.
trying to sidestep every storm they have. We got hopefully the hurricane it's sitting over Jamaica right now. Those poor people.
No
I
kidding.
mean, it's just sitting on top of them.
Yep. And it's category 5, right?
Yeah. So it's basically erasing everything. Um, so hopefully that'll turn east and head back into the Atlantic. So anyhow, there's your weather report.
Yeah.
Uh,
We got
all
we
right.
got
Well, what's that?
so we got rain here, so I'll be heading towards Manual in Chicago.
Yeah, there you go. All right, we'll wrap it up there.
Okay,
And
right.
we'll wrap it up there. We'll see you all tomorrow. Same time, same place. Big earnings week. This will be exciting.
Yep.
Go from there. All right.
Thank you.
Thank you, guys.
Thank you all.
Bye.
Have a wonderful
Bye.
See you
day.
later.
Thank
Take
you.
care.
Bye.
Thanks.
Thanks.
Live loud.
Live
You
loud.
too.
Peace.
You